Still.
I think that's a good idea. It's 6 past, so just to respect everybody's time, I think we should get going here, and then this will be recorded so they could go back and watch it anytime.
It's going to be recorded in.
Okay. All right, Melissa, let's get started here.
Okay. So good afternoon, everybody. Thank you. Nicole, are we recording? We good to go? Okay. Good afternoon, everybody. Thank you for joining us. This is going to be Closing Disclosures Demystified.
Okay, I think I got it. I'm going to.
In a position today where we're going to be discussing all aspects of the documents that we know and love and need for completing a closing, which is the financially driven documents, the closing disclosure for both buyers and sellers, the shared ALTA settlement statement, as well as the HUD statement. So big thank you to Jen Bove for moderating for us today. So thank you, Jen.
Anytime, Melissa. Happy to be here. So we're just going to ask that you put all of your questions into the chat section, and then I will read them to Melissa and make sure we answer all of your questions today as we get through all of this wonderful material that Melissa presented for us, or is presenting for us today.
So I know that there's still some questions about closings during COVID. So I just want to kind of knock this out of the way. We still believe that agents are a very crucial part of the transaction, even if you're not able to attend. And I know we're all feeling terribly disconnected. You're maybe feeling a little bit disconnected. So it's normal. It stinks. We really wish that it wasn't happening. And while we have invited our agents, does anybody see this? Okay, never mind. Said that my meeting was going to end, but I guess we're all set. I got a notice that the meeting's going to end in 10 minutes.
I do see that. I'm going to try and make sure that it's fixed before it ends in 10 minutes.
Okay, thanks, Nicole. You see it? Okay. So as far as our agents are concerned, we're still very much inviting our agents to attend closings. We're finding that less and less agents are feeling as though they want to attend. So this class is even more important relative to making sure that you have a firm understanding of what the closing disclosures and financial documents look like for purposes of being able to understand the documents that your clients are signing. Also, just again, kind of a side note, the settlement statements, we know that you need them in order to be paid. Every closing attorney understands that you need them in order to be paid. So we are routinely sending these to you after the closing. However, there is a process. We need to make sure we have fully signed documents from both parties. By and large, with the bifurcated closings, the buyers and sellers are signing at separate times. So that definitely makes things a little more challenging. We also need to make certain that we're recording the transaction, and that's typically when we're going to send it out to you. So it should be same day or certainly the next business day, just so you're aware. And again, recommending commission checks, perhaps want to consider picking them up versus in the mail, just because the mail is still showing a bit slow. But I do think that it's important that you understand we as closing attorneys are getting the preliminary documentation in advance of the closing to our prospective clients in advance as much as we can. Bear in mind, the lenders are still extremely overwhelmed with the volume that we're working with. And even as closing attorneys, we're all a bit overwhelmed with the volume we're working with. So we're doing the best that we can to get these numbers out to the clients in advance, perhaps working with your attorney partners just to see preliminary numbers. If we don't have final numbers, might be a good workaround solution for you guys. So if you're finding yourself frustrated, that may be an option. And then one last COVID piece is that sellers are typically meeting 1 to 2 days in advance of the closing for purposes of signing their documents. So that's important just to mention to your clients when you're setting a contract closing date of February 1st, and now your seller takes off February 1st, but they're really going to sign 2 days before. Why did they take off February 1st? So that may be just, again, kind of a tips or tricks that you can talk to as listing agents to your sellers about, because they are routinely going to be meeting with their own counsel, signing their documents in advance, and they don't need to be available the day of the close. So getting into the goals of today's class, I just want to deal with that COVID piece for any lingering questions. Want to address the way that these documents are, how these documents are intended to work. It's intended to be a final accounting, and it's going to account for all of the closing related items, all of the mathematical and number items, which could be, you know, obviously the sales price, any kinds of closing costs or concessions. Certainly your commissions should be reflected properly, all of the respective prorations. Once the final accounting is approved by the lender, that's when we as the closing attorney start circulating those documents to the parties for review and approval. And bear in mind that legally speaking, it is mortgage fraud to handle transactions outside of the closing or financials outside of the closing. I have one that's scheduled for tomorrow, and somebody in the transaction, one of the agents, put an addendum together that indicated that there was going to be a $10,000 bank certified check between the seller and the buyer for repair related items. Now, of course, the seller doesn't have the money. They don't have a bank certified check that they're going to provide to the buyer. So now they contacted us as the closing attorney and said, well, what are our options? How can we facilitate this? And I said, I can't be involved. You as the agents shouldn't be involved. It is mortgage fraud. So you have to be super careful about the way you're structuring your transactions so that you are able to fit all of the financial exchanges between the parties within the confines of the agreement. Ideally, you would make a price reduction. That is the best and cleanest way to allow for an offset for repairs between buyers and sellers. I understand, Jen, obviously we have this conversation a lot with agents. The offset is, well, now the buyer doesn't have the money. So that's great that we paid 10 grand less for the house, but we don't have the actual dollars to pay for the contractors to do the repairs. So in that case, maybe we need to be more organized in the way that we're scheduling the closings, where we have bills from prospective contractors, so that instead of a $10,000 credit or a $10,000 price reduction, maybe we have $10,000 in bills that the seller is going to pay out of their proceeds to the buyer's contractors, supported by the invoices that they've shared with us, so that we have the opportunity to legitimately pay a third party, opposed to having the seller give 10 grand on the sly to the buyers. So I just want to
Melissa, can I chime in there for just 1 second?
Yeah, I want to make sure
because this is one of those points where we get caught up on so many different times. And what do we do? Do we do the price reduction? Do we do a credit for closing costs? If you can't do either of those, let me back up, either of those, then absolutely this is another way to make sure that that $10,000 gets handled. Yet you do have to connect with the vendor contractor on if they will take payment at closing. Right. Lots of vendors will, some will not. So don't just assume, oh yeah, the vendor will take that check at closing. Make sure you're very proactive with that and have that conversation with the vendors, buyers, and sellers ahead of time.
And sometimes, Jen, there's not even enough time for the seller
true.
to facilitate getting contractors in place to do all of the work in advance. So we may actually be talking in this hypothetical about buyers' contractors for work that will be done after the fact. And so long as we have an invoice, we would agree to make the payment out of the seller's proceeds to that third party, with the expressed understanding that maybe the buyers are just going to hold those checks because the contractors are coming in 2 weeks or something of that nature. Obviously, it has to be work that you're going to do fairly soon, because otherwise the check will become stale. So,
right. And each attorney's office is different with that as well, because some attorney's office will say they will not handle that. So make sure you check with your attorney's offices as well.
1000%. Yeah. So the agent's role in not only reviewing the CD, but in helping us generate it. Bear in mind, you guys, in order for us to prepare a closing disclosure, regardless of what side of the transaction it's on, we need a ton of information. We need data that we don't have because it comes from you. For example, closing cost credits. I cannot tell you how often, and this just happened a couple of weeks ago, where there was a closing cost credit that was a secret. And I call it a secret because the buyer's attorney, I was the seller's counsel. Neither of us were aware that there was a closing cost credit that the parties had negotiated. So the agents had forgotten to communicate it to us as the attorneys. But bear in mind, we're the ones who are handling this. So if we don't have it and the bank doesn't have it, it's like it doesn't exist. So in that particular instance, my seller and I agreed that we were going to delay the closing because she didn't need the closing to happen. Buyers had to put it back through underwriting, and we were thinking that the closing was going to be delayed. By some miracle, because we were unwilling to just write a check for $5,000, the buyer's lender got it done same day. The buyer's attorney was able to close it same day. It was miraculous, actually. But
So Melissa, I don't mean to interrupt you on this because it's a really good point to make and good story. I did just get a message that the meeting will be ending. So just instructions for all of the 34 of us on right now. Please go back to that same link, the new link that was just sent out, and come right back on. We will be here, but this meeting will be ending. Sorry for the technical difficulties today. We will get this figured out, but if you could just, it's gonna end. So once this ends, hit that link again that you came on to, and we'll be right back here.
So it's nothing I said.
It's nothing you said, Melissa. Not yet.
Okay, good. Should we discontinue the meeting now, or are we going to wait until it kicks us off?
I guess it makes sense for us to probably just jump off now and then just use the link.
Okay. All right. Well, we'll see you all in a minute.
We are recording and we're back on, and we have almost everybody that left us. So.
Okay, so where were we? We were talking about gathering information as it pertains to preparing for a settlement. Obviously, buyers and sellers are going to have questions about the final figures, so ensuring that you're getting all the data to us as the closing attorney for accuracy is crucially important. Oil readings tend to be a really critical question. It is not good enough for you to send me a picture of a tank gauge. It could be your tank. I have no idea whose tank it is. So what I'm going to ask is that you're always advising your clients to make sure that they're getting tank certificates, which should be on letterhead from the respective company that is servicing them. So that's just another example of one of the types of credits or adjustments that we're making between the parties. And again, the goal is for you to be able to review the ALTA, the settlement statement, the HUD statement, whatever it is, with your respective client. More importantly, at the very least, for you to make sure the information is reflected accurately. And if you look at nothing else, guys, look at the commissions. Make certain that the commissions are accurately reflected. So the history of the Truth in Lending Disclosure Integrated, or Truth in Lending Integrated Disclosure, which is TRID, was enacted back in 2015. And I don't want you all to fall asleep, so we're just going to kind of glaze through this. But the intention was to make a universal set of documents for buyers to understand what they were signing. Bear in mind, buyers are required to get this document 3 business days in advance of the closing. Most of the lenders, and I know that our respective market centers all work pretty closely with Movement. Most of the lenders, including Movement loans, with the exclusion of Rhode Island housing-based transactions, are able to send out the closing disclosures to account for this 3-day compliance rule during the underwriting phase. So usually you are going to have it circulated throughout the transaction at some point, and it is not going to be final. It doesn't have to be final. So long as the interest rate doesn't change within a certain threshold and certain closing costs don't change within a certain threshold, as long as that document goes out, we're ready to go. So bear in mind, not every lender does that. So if you are a newer agent, or if you've not worked with this particular lender, you may want to ask the question, when is the closing disclosure going to go out? Is it during underwriting, or is it going to be once we have a clear to close? Because if it's after the clear to close, then that means you have to wait 3 business days before you can even schedule the closing. Again, not every lender handles it that way, so you just want to understand that nuance. And also bear in mind that the sellers have no 3-day requirement. The protection here from TRID is for consumers. Sellers are not considered consumers in that regard. So it's all about the borrowers. So if a seller hasn't received a copy of a closing disclosure and they're all aggravated because they don't know what the numbers are, again, you should be working very closely with the seller's counsel at that point to get them, at the very least, a net sheet, if you can't get them a preliminary seller's closing disclosure. But a lot of closing attorneys just can't be bothered to draft closing disclosures beforehand because they're waiting for the lender to give them the guidance. Once the lender gives them all the information, that's when they're going to generate everything. So you may have sellers who are super anxious and need or want numbers in advance. You know who they are. When you know who they are, make sure you're putting them in touch with a very responsive seller's counsel, and that way they can see their numbers ahead of schedule.
You know, Melissa, before we jumped off that last link, there was a question in the comments that we didn't get to, and I actually don't remember exactly what it said, but I do remember it was Mandy Baldwin. Mandy, would you mind unmuting yourself and asking the question you had put in that chat section?
Yeah, so it was about the kind of the situation where you had the $10,000 outside of closing, couldn't you put that into escrow and have them pay the vendors as the work was being done, and then any difference go back to the seller?
Generally speaking, a lot of lenders will not allow for an escrow. So that even can beg the question and create a complexity where now who's going to hold the escrow? The buyer's attorney may not feel as though they can. So then they may lean on the seller's attorney. I know that my office hasn't quite implemented the policy, but a lot of offices are, where there's fees associated with escrowing funds. So while that is an option, Mandy, it would really be benefited to have that serve as a last ditch effort. And I can tell you that if there is going to be a need for an escrow, make certain that you're discussing it with the closing attorney or respective seller's counsel. You can't just volunteer them to do something like that with the expectation that they're okay with it. A good point. Yeah, of course. So with any luck, I think we're going to get into the buyer's closing disclosure, and I don't know with jumping off if my screen share is going to work the way I'd hoped, but we will see. So we're going to take the buyer's closing disclosure one page at a time, and my intentions are to show you an actual buyer's closing disclosure. Understand that the fundamentals of the closing disclosure is a very detailed accounting of the transaction for the buyer. And page one is probably the easiest thing to read and the most important, because the intention is for the buyers to understand certain things. You should all be able to see the buyer's closing disclosure that I have prepared. Is it large enough, Jen, or do I need to make it bigger?
It's not on the screen currently.
Oh, okay.
If you'd like, I could share it.
By all means.
Okay. Here we go.
Okay, perfect.
Is it big enough?
I think it works for me. Can you see my mouse moving?
No.
No. Okay. So that may be a challenge, but we'll figure it out. So the loan amount you can see referenced in the loan terms, the interest rate, the monthly principal and interest payment are referenced in the loan terms. To the right, you're going to see a whole host of no's. The no's are to indicate that nothing is going to change after the closing, which means you're basically in a 30-year fixed program. And the very uppermost section, which I just kind of glaze over, just that shows you all the particulars of the parties, the closing date, the type of loan transaction. You'll see that there's a loan ID that's serving as an account number. This is one of the pieces of what's considered non-public private information, or NPI, that is a loan number or the account number. Because that's there, we are not supposed to be disclosing it to the buyers, or the agents rather, or sharing it with the sellers. This is why the buyer's closing disclosure is intended just for the buyer. The seller's closing disclosure is intended just for the seller. When you see the ALTA settlement statement, you'll see there are no references to account numbers, interest rates, or any specific details of payments. So Jen, if you scroll a little further down in the projected payment schedule, about halfway down the page, you're going to see the principal and interest, which came from above, plus the escrows. This is going to be explicit of their taxes and insurance and any applicable escrows to bring them to their full payment. Now, the estimated taxes, insurance, and assessment section is sort of confusing because this is showing 583.19. And what's particularly confusing here is right above, you're seeing 310.19. So you're probably scratching your head going, what's the difference? Well, I'm quite sure that in this particular transaction, yep, it is. It's a condominium. So what's happened is that the bank, in their infinite wisdom, is identified that the escrow section, not only for the taxes and insurance, but the monthly HOA fees, which of course the buyer is going to pay separately to the association direct, should be added in and contemplated to that 583.19. So if you were to take the 719.67 and add to it the monthly 583.19, that's really the client's full outlay, which again is the intention of the lender, just to make certain that the client has all the data and all the information. While it can be wildly confusing if you don't know where and why that information is pulling, that's the reason. And the lowermost section that indicates the cost at closing is where you're going to see the indication here of the cash to close is $40,073.75, of which you have some closing expenses or closing costs totaling the $45,92.57. So Jen, instead of going back and forth with the PowerPoint, maybe we should just stick with the buyer CD at this point, so we're not toggling. So the buyer's closing disclosure, I'm just going to explain to you the fundamentals of what page 2 is getting into. It's going to enumerate all of the closing costs that are associated with the loan that the buyer is responsible to pay. Now, you're probably familiar with lots of different loan feature charges like appraisal fees, application fees, verification of employment. That's just to name a few. Additionally, you are going to see prepaid interest, because interest on the loan, as you may be aware, is paid 6 months behind. So for example, anybody that's having a closing today, which is January 14th, we are going to collect the interest on the loan from today through the 1st of February. And as a result, the client's not going to have a mortgage payment due until March 1st. When they make their March 1st mortgage payment, they're actually covering the loan for the interest for the period of February of 2021. And that can be wildly confusing for people, but understand that's also the same bit of information you need to reconcile the difference between a seller's mortgage payoff and the account balance that they see on their statements when they look at their mortgages. So Jen, I just want to pause for a minute and see if there's any questions surrounding that, or if there's any place you want to interject to add information about that.
No, I think that this is absolutely great information, and I would love to hear from the group. I mean, we now have 34 people on. I'd love to hear from you guys if you have questions on this, or if you've ever struggled explaining, having a conversation with a buyer around this closing cost details.
Mm-hmm.
Any questions?
I know that we can see the CD in front of us. So in section A, under the closing cost detail loan costs, that's really where you're going to see the specifics relative to the lender charges that I had mentioned. You can see there an application fee and a validation services charge. You're also going to see in B1 a credit report fee. So this is giving you sort of a flavor of what some of those costs will be. Additionally, in paragraph C, you're going to see all of the title related charges. So in this particular instance, you're going to see the fees to our office that were charged for the title search, the administrative costs that are associated with conducting a title search, including purchase of the closing protection letter, courier fees, purchase of a municipal lien certificate, wire transfer costs, and those are itemized in painstaking detail, as you can see there. We also have the title insurance premium, as well as our services for conducting the closing. So those are the places that you're typically going to see the attorney's charges. In section E, we're getting into the governmental charges. So this is where you're going to see the recording fees about halfway down the page. And then in section F is where we're talking about the prepaid. So this is where it's talking about that prepaid interest that we had kind of talked about, the fundamentals, as well as prepaid homeowners. Bear in mind, most clients are not going to pay their homeowners insurance in advance of the closing. That's something that we typically would collect at the time of closing. So you can see in this case, we were paying the homeowners for the whole year.
Also, just to let you know, I did throw in the sample of the buyer CD in the chat. If you are on a cell phone or on a tablet, you will not see those samples. But if you are on a computer, you should be able to see that you could download that PDF.
And we can also email you not only the PowerPoint, but the PDF copies of these documents if that's useful. If you have any one-on-one follow-up questions, by all means, please let me know. Now I know, Jen, our screen is a little bit oversized, so you guys can't really see, but I should have started, if you can scroll back up to the top, I'm sorry. Top of page 2, you're going to see that there are 5 columns. So you'll see the borrower paid column, borrower paid at closing, which is the column that we've really been focusing on. Borrower paid before closing appears to the right. So in the example where a buyer had already paid their homeowner's insurance, for example, you would have typically seen it off to the right and indicated accordingly. The columns to the immediate right of that are the seller paid items, which sometimes you're going to see that as completely blank. Other times it will be completed. And then to the right of that are paid by others. So if you have a lender that's paying closing costs for the buyer, that's typically where it would be remunerated. So I just wanted to make you guys aware. So back down to section F, we had the prepaid items. You also have in section G where we would be setting up traditional escrows. Understand that fundamentally, if a buyer is going to be paying taxes and insurance as part of their mortgage as one simple payment, then the bank is going to be responsible to escrow. They have to establish what's known as an escrow cushion, which is what you see here. $310.19 is the total in section G. And then you can see the enumeration where it's 3 months of homeowners insurance, and then the property taxes were referenced on a separate page just because of the way they have it indicated here. So that, and then you'll see there was a net credit. The aggregate credit in G8 comes up all the time. People always ask me, why is that there? And I just tell them, I don't know. Usually it would be easier if the bank just wrote 1 month of homeowners and 3 months of taxes, but we often find that the banks are customarily over collecting, and then they realize that there's federal restrictions on how much can be collected in interest or in the escrow. So that's when the credit is going to be imposed. And then section H is going to be kind of other items. So again, you can see commissions are referenced there to the seller side, but sticking with the buyer section, the only thing you're going to see is in G5 is the purchase of the owner's premium for the title insurance, and that's reflected accordingly. So the lowermost section in J is where you're going to see the sum total that we have 4592.57, and we're going to take that and follow it through to page 3. Now, for anybody who remembers the HUD statements, then page 3 is going to be the closest to a HUD statement that you're going to see, where it's kind of taking into consideration all the data. Now at the top, you're going to see calculating the cash to close. That's just showing you a kind of a breakdown of the loan estimate versus the final. I'm not worried about that. We never address it in my closings because it's done. I really don't care what the lender quoted to them in advance. I care about where we are. So in section K, under the summary of transactions, is where you're really going to see the breakdown of what the client owes. And these are the buyer clients, because we're still talking about the buyer's closing disclosure. I know some people are kind of hopping in and out, so I'm going to try to regroup us a little bit. So in the borrower transactions in section K, it shows us what the buyer owes at closing, 216,122.81. And you're probably thinking, well, where did that number come from? Oh, I'm glad you asked. It's all itemized below. This is probably one of the few documents where I've ever seen numbers adding up, but that's the way we do it. And of course, in K1, you can actually see the sales price. Bear in mind, we've gone through 2 full pages of the closing disclosure, and this is the first time we're seeing the sales price. So you can see your sales price reflected of 210. You can see the closing costs that we collected on page 2 are itemized there in K3. You can see working capital. So this is the place where fundamentally anything that the buyer is responsible to cover is going to be reflected accordingly. So if we had oil or fuel adjustments, if you had a flood insurance policy that perhaps a buyer was going to assume from the seller, if there was a water credit or any kind of overpayment for anything, these are where you'd see it. Just like you can see, as Jen pointed out in section K9, is the proration for the December condo. This particular transaction took place on December 4th. The seller had already paid the condominium fees for the month of December. So from December 4th through the 31st, I don't know however many numbers of days that was remaining, 27 or so, we had to prorate out the adjustment there for the condo fees, okay? And in section K, if you go up a little bit to K4, the working capital was something that the buyer was responsible to cover to the association, so we collected it here. And again, based on the time frame of when certain debts are coming due, if the buyer has an expense that's coming due for condo fees, like you can see here, January, February, and March, those were prepaid on section K5 in the amount of $817.74. So this is where we're going to collect everything that the buyer owes. And then down below is where we're going to reduce everything that the buyer owes, because now we're getting into basically their credits. Am I going too fast? Is it okay so far? Okay. So in section L is where you're going to see the sum or gross total of the credits, in this case, 176.4906. And that is going to be itemized again for you by the deposit that was paid. So this is where typically we're going to see the deposit reflected that the buyer paid and is applied to the purchase price. Bear in mind that any deposits that are collected in advance on the seller side would be applied towards the commission, but this is where we see it on the buyer side. The loan amount that the buyer is collecting or borrowing, the closing cost credit as may be applicable, which you can see here referenced 5,500 because the agent didn't keep it a secret. You guys did a good job of getting us those amendments, so we were able to include it. And then the respective tax adjustments are section L12. And of course, bear in mind, taxes are always 6 months behind, so we're always going to have a little more there. So the bottom line is really just truly that. It's a total. It's the difference between the gross amount that's owed and the credits comes to that same bottom line that we saw on page 1, 40,073.75. So kind of moving on to page 4. Page 4 is really just a host of disclosures. So this is sort of a standard document. It will identify features of the loan that are going to be observed on the promissory note. So my particular practice is that I don't really spend a lot of time here, but if you have a client who has been spending a lot of time reading through this and really combing it over and you are not feeling comfortable about answering these questions, that's because you don't know probably the answers to the questions. You may not understand what an assumable feature of a loan even is, never mind how to explain it to a client, or whether or not there's a recourse feature that's, again, state specific. So these are features that I would recommend that if you have a client that wants details, you're getting that person in touch with their closing attorney, because we are available to review those with the clients, assuming that they're circulated in advance. The escrow accounts will be disclosed, if partial payments can be disclosed, confirmation of the property address, which is referenced at the bottom. Again, not a whole lot to see on this particular page. So Jen, if you could just get us to page 5. So the loan calculations, dun, dun, dun. Anybody who is asked, well, how much am I paying over the term of the mortgage and how much really with all the interest? This is where that ugliness appears, which is why I usually glaze through it, because it's somewhat overwhelming. But you can see in the loan calculations, total of payments, we know the client's paying $210. We know that what they were borrowing is only $168, but over the 30 years, they're actually going to pay $262, $193.13, which you can see referenced in the total payments. So I don't, again, usually draw a lot of attention to this. You'll also see a reference to the APR, or the annual percentage rate. That's not the actual rate. So I usually would, again, guide the client back to the promissory note is what governs the repayments. The lowermost section is where you'll see contact information. And this is really where you should see your respective name. Your license number will be there. And this becomes crucial for you to make certain that the information is correct on the sales agreement. Because if the data is not on the sales agreement, we can't pull it, and then we can't complete this. And, again, it just kind of leads to garbage in is garbage out. So any questions on the buyer's CD? Jen, I think I'm going to take over and hop over to the seller's closing disclosure on, yeah, whatever. Can you see me now?
We see you. We don't see your screen. Yep, here we go.
Okay, there we are. So no questions on the buyer side. We'll just get back into the seller side of the CD, I guess. Pause for a second. Okay, so the seller's closing disclosure, as you all might expect, is going to be largely similar in that we are going to be looking at the final accounting only on the seller side of the transaction. So I don't know, and it would be interesting out of curiosity if you're all in front of me, how many of you are primarily listing agents versus buyer's agents, but you're going to see the same thing only in reverse. The credits are the incomings, right? That's how it works on the sales side, the sales price, plus the remaining items that the seller is due for reimbursements like the fuels, any overpayments for real estate taxes, any credit balances that appear for water and sewer and things of the nature. This is where we're going to see those items reflected. And the debits, which is the converse, and you're going to see that on the Alta in a few minutes, is going to have all of the reductions for your expenses. So those are fundamentally your closing costs, the tax stamps, the recording fees, the mortgages or debts that need to be paid off as part of satisfying the title and clearing it, any kinds of tax adjustments or other municipal related items, and of course the commissions and agent reimbursements and things of that nature. So Jen, I just want to pause for a minute, and I know you and I had kind of talked about this offline in advance as to how closing cost credits and the seller CD can impact us getting commissions. But first, let me just ask, how are you all handling a closing cost credit? Let's just assume for a second that you're having a closing cost credit of $5,000. Is that impacting your commissions? I guess the easy answer is it depends. So if the closing cost credit is going to impact your commission, we need to figure out the way in which it's going to be handled. So commissions can be reflected in a lot of different ways fundamentally on these documents. Honestly, it's almost like no two closing disclosures are the same unless they're coming from the same attorney's office and the same paralegal, because there's lots of ways in which we can get these in. So generally speaking, commissions are going to be shown grossed up. So there's not going to be any deposits referenced whatsoever on the closing disclosure. So you as the agent really kind of need to know, well, what is the gross commission? And you want to separately know how much the deposit is so that you know what your check is going to be. Because I can't tell you how often I'll hand an agent a check and it's net of the deposit, and then they're not sure why the check isn't for the same amount that appears on the closing disclosure. So generally, that's how it's going to appear. If in the event there is going to be a reference to the deposit on the closing disclosure, then in that case, the commission will have to be showing a reduction. So if, let's just say hypothetically on the closing disclosure, I'm showing a $5,000 deposit and a balance of $15,000 of the commission, that's fine because we know that the commission grosses up to $20,000. So you can see in the example, if the total commission is showing accordingly, then that's how it's going to reflect. If though there is no $5,000 deposit referenced, it should reflect a $20,000 commission because that's the gross amount. So I just want to stop and make sure that there's, no questions on the way that the commissions can reflect. And again, the closing disclosures can show it in lots of different places.
So Melissa, I don't have any questions in the chat section yet. Did you want me to put the closing disclosure up on the screen?
In 1 second, I just want to get through the excess deposit and also the way we're calculating the commissions. So in the event of an excess deposit situation where, let's just say hypothetically the deposit is more than what the commission should be. So in the hypothetical above, if the commission is $20,000, let's pretend that there's a $30,000 deposit. So now you have a $10,000 excess deposit. What is happening to that $10,000 is definitely a question that we need to be addressing upfront. You can't show up to the closing and go, oops, I forgot about that 10,000. So you should be working very closely with your administration as well as with the closing attorney's office to determine if that $10,000 is going to be reflected on the closing disclosure, in which case you're going to hand deliver the check payable to the seller, or if in turn you're going to give the $10,000 to the closing attorney, which means it's not reflected on the closing disclosure. And as a result, the bottom line to the seller is $10,000 more. So it's discretionary. Different attorneys will handle it different ways. Different paralegals will handle it different ways, but you can't walk into it not knowing how the commission and the excess deposit is going to be handled. So I just want to make sure that that's abundantly clear.
Okay, and I do have a question in the chat.
Sure.
And it is, why would a seller provide a closing cost
Credit.
Credit, sorry.
Most of the times the closing cost credits are a function of financial need. So the buyers may not have enough liquidity. So as a result, they're basically inflating the sales price. So let's say in the hypothetical, we use the sales price is 210. Maybe the buyer was actually only offering 205, but because of the way the lender recommended structuring the transaction, they encouraged the parties to increase the sales price to 210 and then negotiate a $5,000 closing cost credit. I know ours was $5,500, but just saying. So I can't really believe this, but I just got a pop-up notice again that identifies the meeting's going to end in 10 minutes. So I don't know. I'll leave that in your capable hands, Jen, with Nicole. I'm going to keep going. So I wanted to address closing cost credits and the way that repairs have an impact on closing cost credits, because this tends to be an area that's of question. So closing cost credits as a general rule usually is shown as a lump sum item, as you saw on the settlement or the closing disclosure that you saw previously. However, it's within the discretion of the lender. Some lenders will actually show the closing costs on the seller's closing disclosure. So instead of showing a line item, as you saw previously, where there's just a $5,500 closing cost credit item on the buyer side, you may see no closing costs for the buyer or really minimal closing costs for the buyer. And then you're just going to see a whole bunch of closing costs on the seller's CD. So it's important for you as a listing agent to understand in that situation how, in fact, the closing costs are being reflected. Because if you have a seller, rather, for example, who's looking at a closing disclosure and they see that we're purchasing a homeowner's insurance binder, they're going to scratch their head and say, I don't understand. I'm not buying homeowners. What's going on? That in your mind should signal, well, that's a buyer-borne cost and you agreed to a closing cost credit. So I'm going to tell you what's going on. The closing cost credit for the buyers are just showing up as a seller cost. If we were to add them all up, because you can differentiate between what's a closing cost credit and what's an actual seller-borne cost, then we would be able to very easily identify the closing costs versus the closing cost credit. And if you have any questions or you're struggling with that, by all means, ping me or get in touch with the closing attorney in that particular transaction or seller's counsel, because it can be a bit bumpy and tricky and very confusing for the sellers. Now, as it impacts your commission, and Jen, this is an area where I don't know if we're going to get any feedback, but if the agents have agreed to a closing cost credit, I find that very often we see that the commissions are net variable sale and the commissions are going to be net of the closing cost credit. So how does it work if you have a repair, for example, and now we've agreed to a $10,000 repair? If it was a price reduction, I would expect that your commissions probably would go down. But if you've just agreed to a $10,000 repair credit, is that going to have an impact or a bearing on your commissions? And I'm wondering if there's anybody that wants to unmute themselves and tell us what your opinion is on it. Okay, well, hearing crickets.
we have a quiet group today, but it's okay. And Nicole is posting in the chat section that it looks like we probably are running into the same challenge with the meeting. So
Okay.
if it does close us off, hopefully it won't. If it does, guys, we apologize again. Just click that same link and we'll be back on here to finish up the last half hour or so. But I would love to get some interaction. Do I have one person in our audience here that could chime in?
Jen, I will.
Kelly?
Thank you, Mary. Go ahead.
It depends on how the commission is written in the purchase and sales agreement to me. Like if I put, or in MLS or however, if I put closing commission is based on gross sales minus any closing costs credit, and I don't address repairs, I usually don't take less of a commission when it's for a repair credit, because the seller would have had to spend the money anyway to fix it. So mine is not based on any kind of repair credit.
And I agree with you, Mary. I think that that's generally the approach because, yeah, if the seller had to put a new roof on, are you going to take money out of your pocket towards the commission to cover the cost of repairs? Likely not. I mean, generally speaking, we're talking 6% of even $10,000. It's not a crazy large number. So in the event that as a listing agent, you have to agree to a concession to make it work, that's fine. But I think that really communication is probably the overarching importance of what we're seeing relative to the transactions, every transaction. So if as a listing agent, you're planning to take a net commission because you negotiated with a repair addendum, make sure you're discussing that with your co-brokes and that they're on the same page, because there's nothing worse than getting a co-brokes commission that doesn't contemplate that when you thought you were all on the same page for it. It's just painful. But I would say by and large, we don't see closing costs. We don't see a reduction to the commission when repairs are the reason for the credit. And even though they're walking like a closing cost credit and talking like a closing cost credit, we know they're actual repair credits. Try to put it on an addendum versus a repair addendum, just for purposes of keeping us all in the dark as best as we can. Certainly also the same case relative to the bank. We don't want to direct the bank to the fact that we had a repair, but really we just agreed to a credit, because that could create open Pandora's box depending on the lender. All right, so you should all be able to see the seller's closing disclosure. Are you with me? No, can't see it. Interesting.
Melissa, if you unshare and then just open up that, when you reshare, you should just select the seller disclosure and it should show it.
Okay.
So when you click share screen, and then it'll give you an option on what screen you want to select. There you go.
Yeah. Okay.
Yep.
So in this particular transaction, again, at the very top, you're going to see some information. Really, the contact information is where you're going to see on the right. So this should reflect the respective agents, and it will show the settlement statement or the closing attorney here. On the left, under the summary of transactions, is where you're going to see everything relative to the, again, kind of incoming items that you have or the credits for the seller. You've got your sales price and the reciprocal closing cost credit that you have, my apologies, the December condo fee that we had, that the buyer had given on the buyer's closing disclosure. So now, just like the buyer paid it, the seller's receiving it, and this is where we're collecting for it. So those items gross up here. Down below, you're going to see all of your expenses, and those are again itemized down below. 9691 is what you're going to see on page 2, which we'll get to. Your mortgage payoff, so that should be fairly straightforward. Any kinds of taxes. So we have the third quarter real estate taxes that we're accounting for here in N6, and then we're also accounting for the remaining taxes for the portion of the year from N14, and that's the way we have to prorate or allocate the adjustment for taxes, because remember, most of the time the taxes are 6 months behind. Additionally, we are collecting for the reimbursement to the agent for the resale certificate that they had collected, the closing cost credit that we've addressed, and we had to pay the December condo fee. Because the closing in this particular hypothetical took place on the 4th of the month, the seller had not yet paid that bill, but we're giving them the benefit as if they did. So we collected it here, $272.58, and then we gave them back the difference, $237.34. So it's really just netting. And the lowermost section, of course, same netting effect, shows that the seller is going to walk away with $64,746.80. So if you go to the second page, if I have any luck in zooming in here, you're going to see the breakdown of the expenses. So this is where I had kind of alluded to that in the event that you had a closing cost credit that wasn't lump summed, as we saw on page 1, you might see lender charges up here. That would indicate to you, since there are no loan costs truly on a seller side, that that's the way the closing cost credit is being itemized opposed to being in a lump sum. The seller-borne costs are typically going to be referenced in this other section, starting with the recording fees for the mortgage releases, as well as the tax stamps recorded at a cost of $4.60 per thousand required by the state. Again, these prepaid sections and the escrow sections, if you're seeing numbers in here, that's indicative of a closing cost credit. And then the other section down below, you can see very clearly you have the commissions. You would also have any kinds of doc prep fee, attorney's fees. If there are any kinds of water bills or sewer bills, they would customarily be collected either on this page or on page 1. Because this was a condo, which maybe wasn't the best example, there really wasn't a whole lot of detail there. And then the total of page 2, which was already counted and brought into page 1, is referenced here in the total closing costs. And customarily, you're just going to see a signatory page on page 3. So Jen, I have concluded with the seller CD. I think with the balance of the time when we jump into the next section, we're just going to share the ALTA settlement statement because there's really not a whole lot on PowerPoint purposes to talk about, except for the fact that now we're basically just taking the 2 respective closing disclosures and melding them into one.
Just keeping it interesting today, making you click on 10,000 links to see us.
And a good time was had by all.
Hi, Bill Ramey. How are you?
Good, Jen.
Just keeping you on your toes today. Making sure we all know how to click a link.
Yes, you are training us for that.
That's right. We're, repetition. Repetition makes you a master at something. And you know what? We're looking at the silver lining of this today. And we are working our Zoom skills. All right. And don't forget, when you do come back on, you are unmuted. So we could hear everything that is going on in your world. I see Melissa is back on with us. I'm just going to turn your camera on.
I don't want you to see me. Okay, we are back for the 3rd time, and we've still got 21 people, so not everybody has lost their cheery disposition about this. Our apologies, guys. Jen, I just need screen sharing so I can show the ALTA.
So that would be
I'm gonna make you the co-host right now.
Thank you. Any questions on the closing disclosure for either the buyer or the seller side, guys? Because as I was saying when I was rudely cut off, is that, ultimately the ALTA settlement statement is just a merger between the 2. So it should be hopefully fairly easy for you guys to see what we're going to be looking at next. And not every attorney uses an ALTA settlement statement. It's actually not required, if you can believe it. Again, background in all of this is that it was an idea that we had, or the ALTA land settlement statement folks had, that when we did the new TRIDs, it was only one side or the other, and we needed one for both sides. Can you guys see this?
We cannot see it.
Oh my goodness. Share screen. I think I forgot to hit share. How's about now? Good? Okay. So this is what I'm using as a final accounting of the transaction. It's what most attorneys are using as a final accounting of the transaction, but it's by no means the only authority. There are occasions where we see closing attorneys just using a buyer's closing disclosure and a seller's closing disclosure. Bear in mind, we're having our clients sign authorizations during the closing, and it's included in the purchase and sales to allow us to share those other documents with you as the agents, as well as this. So again, getting back to that whole NPI, the non-public private information, we know that there's data in here that wouldn't normally be disclosed to the public. It's not like I'm going to post this on Facebook, but to the extent that we have no choice, because there is no ALTA, the respective buyer and seller's closing disclosures will be accepted by your respective offices for purposes of dispersing the funds. They ultimately just need something to confirm that the closing took place, some sort of signature, not only from the client, but also the third party, which would be the closing attorney acknowledging, yes, this happened. And you may have remembered the closing disclosures only ask for the buyers and sellers signatures, not the closing disclosure, or not the attorneys. That's why the ALTA, again, is superior. And I think most offices would prefer to have both sides of the transaction on one page, but I can't force every attorney to do it. I think most real estate attorneys do prepare an ALTA, but kind of is what it is. So without further ado, we're going to get into it and just take a look at the fact that this document is going to be in debit and credit format, which can be wildly confusing because buyers and sellers are not used to thinking about this in the monetary way of debits and credits. Can you guys see this? Is it large enough?
It is on my screen.
Okay.
Oh, looks like Carol says maybe just a little bit bigger.
I'm trying to move my Zoom controls so I can get to making it look bigger.
And I will put it in the file section here in the chat.
Perfect.
You know
Okay.
what, if you make your views of the people smaller, Carol, then you can, there's a little arrow like halfway down towards it, that then that whole screen that she's sharing shows up larger.
Yeah, for the life of me, Carol, I can't figure it out. I'm sorry.
No, it's not you, Melissa. Each individual person should be able to
Control it.
Control
Good.
it. That's all.
So you can see my mouse moving, yeah?
Yes, we can.
The buyer side, okay, is going to be in a debit and credit format. The debits are going to be all of their incoming items, fundamentally. The credits are going to be all of their reductions, just like we went through. Basically, this is going to be page 2 of the closing of the buyer's closing disclosure. And this is where you're going to see the items from page 3 in the buyer's closing disclosure. And the same thing is reciprocal on the seller side. The credits are the incomings. You have the sales price and the adjustments that are due back to them. The debits are going to reduce what their bottom line is going to be, because these are the things that we have to account for or add. Oh, brother, I have a crooked ALTA. Help. I don't know if now, because I tried to zoom it. Well, that one's okay. Take you to the third page. You're going to see on the buyer side, the bottom of the credit section, these are all of their credits, including their loan amounts. The bottom of the debit section is what they owe me. And remember, we saw that on the closing disclosure. The net difference is where it says here, balance due from. And if you go way over here, 40,073.75, that's the number that we saw in the buyer's closing disclosure. So this is nothing more than a mirror of the closing disclosure, just a different format, you guys. But it's important for you to understand how to read both, because if you don't get a closing disclosure and you just get this, this is useful. Same thing for the seller side. You can see at the bottom in the middle, balance due to, and if you look over here, 67,746.80, same number that we looked at previously. So to the extent that this is crooked, and my apologies, although it does appear everything's here, you can see on the buyer in the debits, all the bank charts that you saw were really on page 1. Remember, those were in section B and C respectively on the very first, for the second page of the closing disclosure. All the attorney's fees that were also in section C, recording fees, which were in section E. And then this was kind of your others, the working capital, the additional condo fees, that sort of thing. And then you've got your owner's title insurance and the prepaid homeowner's insurance. So this is where, again, you've got that sum total. If you were to look at the seller side, sales price and the condo adjustment, got your closing cost credit, the respective tax adjustment, which again, you'll see this is the credit or proration section because it's showing as a debit on the seller side and a credit or reduction on the buyer side. And conversely, the condo fee is a debit on the buyer side and an incoming or credit on the seller side, because this is where we're making the respective parties whole. And this is largely where you're going to see in these top 2 sections, items that are shared, just like the closing cost credit. Does that make sense? You're also going to see, if you go to page 2 on the debit section, the commissions, the recording and tax stamps, mortgage payoff, the taxes that were due on the sellers, as well as those reimbursements that we had addressed, condo fee for the month, and then the little sideline items. So this one is, I think, fairly straightforward if you understand how the debits and credits work, and more importantly, if you also understand the way the buyers and sellers' respective closing disclosure works. So any questions on this particular document? I know it's been a little disjointed today, so I want to make sure we're stopping and fielding any questions.
Yep. Melissa, can you speak about title insurance, whether it's mandatory or not by the bank and closing attorney?
Absolutely. Yeah, of course. And Jen, I think we do have a few minutes to pop onto a HUD statement. So I know that you are going to share that. So while we're chatting, title insurance is absolutely not required for purposes of an owner's policy for title insurance. And I'm glad that this came up. You will see in the body of the numbers that we're looking at for the settlement statement, for example, there's a lender's title insurance premium here in the amount of $420. That lender's title insurance is required. That's a mandatory policy. The owner's policy that you see here on the buyer side of 365 is the optional coverage that we're talking about. Ultimately, what title insurance protects and provides for is that in the event that there was something latent, hiding, unbindable in the back title, something that could have been a result of fraud or some other related historical item. It's one of the few insurances where we're protecting what's happened in the past so that the buyer on a going forward basis is adequately protected. But this is what the title insurance is going to be in place for. It's basically saying in the event of a fraud, mistake, typographical error, just something that was flat out missed, this is what title insurance will protect, is to ensure that the buyer is not disrupted from their use and occupancy of the property, their quiet enjoyment. So let's take out the hypothetical. If somebody were to knock on your door and say, hey, do you know this was my Aunt Jean's house? And as far as I know, she still owns it, but she just passed away. And sadly, it looks like you live here. That is almost always where we see it happen, is a result of a death or, disabled member that's no longer part of the community. They've gone into a nursing home or disability facility, something of the nature. That's when these types of assets come up. And what's going to happen invariably is you say, well, I don't know, I bought it from, Bob the Flipper. And Bob the Flipper may have been the person who took it from Jean. There may have been some shady practices, or maybe it was 10 years ago and Jean signed the ownership and, this person just didn't realize that the ownership had transferred. Maybe it's completely legitimate, or maybe somebody had been taken advantage of and signed a deed while they were under some sort of form of duress or compromised state of mind, in which case they didn't know what they were doing. These are places where, as a homeowner, you're probably freaking out a little bit because you think, oh my God, I'm going to lose my house. Well, if God forbid the worst happened and you were going to lose your house because Jean signed it in a compromised state of mind, what's going to happen is that the title insurance is going to spring into action. Not immediately. I mean, this is going to take months, maybe years. And by the way, I've never seen this happen personally firsthand. I hope, fingers crossed, I never do. So in the event that this were going to happen, the title insurance company would say, first of all, we're going to investigate it. Second of all, we're going to defend it. If we're not successful in defending it such that there's going to become a break in the title here, the bank is going to be paid for the amount of the mortgage, and the homeowner is going to be paid for their equity position in the house. I mean, of course, that's not your first choice, right? You want to continue living in the home that you thought you could buy and that you've been living in. But this is the way that the title insurance protections are in place. And frankly, it is small money for very, very strong peace of mind, because Jen, the owner's policy that you see here, the 365, is a one-time fee. They buy it once when they buy the property and they never have to buy it again. They don't have to renew it. It's not an annual premium. So the idea that somebody may not want to protect that investment, in my mind, is kind of ludicrous. And just to further kind of bring it back to where we started with COVID, right now, our office has taken a pretty hard position that we will not close a transaction without an owner's title insurance policy, because most of you are aware that we are having various disruptions in the way that we can search the titles and record the transactions. And as a result, the title insurance companies have initiated what's known as gap insurance. Without gap insurance, we basically would have no closings, because, and I use this example a lot, if I have a closing today and the property is located in the city of Warwick, I'm not allowed in person. I have to either drop it in a Dropbox or send it overnight mail. Our office policy has been to send it overnight mail, because at least now we have a receipt to track that the document has arrived to the building. But from there, I don't know what happens. And we actually did have an unfortunate situation where a couple of weeks after the closing, we went on to the land evidence database and we're trying to find a document and we were unable to find it. What was weird about it is that we found the deed, but we didn't find the corresponding mortgage. And eventually the town told us that they found it in the, I can't remember the name of the governor's office or somebody like that. And I was like, I don't understand. How did it make its way to that particular office when the land evidence is across the hall? It was just confusing how the document or how the overnight package was somehow dismantled. And unfortunately, that's one of this, very concerning items of closing during COVID, is that we don't have the same level of control, not only from an uptake in the title search, but also in the recording piece. So that's why the title insurance and the gap has been so crucially important. And really, like I said, something that our office and a lot of closing attorneys have taken the position that if you don't buy an owner's policy, we're not going to close it, because it's just way too much of a risk. I've told people I think it would be irresponsible, frankly, to not buy it.
Probably so you answered Mandy's question, which was how long is title insurance good for, which is
super. I was just going to say, really long lawyer answer to a very easy question. My apologies. So do you mind sharing the HUD statement? And I think that's how we're going to round out our time today. Do I need to stop sharing perhaps?
Yes, please.
All right, so I stopped sharing. And if there's any questions about the closing disclosures or the settlement statements, by all means, we still welcome those questions. But to any of you who are handling transactions where there is cash involved or where there's hard money involved, so that maybe there is no traditional quote unquote lender, you're probably going to see a settlement statement or a HUD statement like this. It also could happen in a commercial transaction if any of you are kind of dabbling in commercial. So this particular document, oh, it's so welcoming, isn't it, Jen? Just so easy. We know and love this document. And that's because, for any of you who have been around for a little while, pre-2015, this is all we knew. This is all we used. And it's like an old friend because we know it. But I can tell you that this is even confusing unto itself. I came into the practice of law after having an accounting degree, and I looked at this document for the first time and I was like, I have no idea what the heck is happening here. So it's comfortable and familiar to me because it's something that I know so well, but for new clients, new agents, this is just as scary and overwhelming. I guess first and foremost, the top section is really where you're kind of seeing your summary section. And then the document sort of splits into sides. So you're going to see on the left, section J is the buyer side of the transaction, and section K is the seller side of the transaction. So when you're a buyer side, you really don't need to be looking at the seller side and vice versa, because, again, if you have any of these kinds of shared credits, like a credit for taxes or closing costs, you're going to see it on both sides. The other thing about page 1 of this particular document is that this is a summary page. So generally speaking, the summary page is where you start, and then you really have to look at the itemization, which is going to be on pages 2 and subsequent pages if you have that many aspects of the transaction. So on the left for the buyer side is where I'm going to start. It shows you the sales price plus the closing costs that the buyer is responsible for in section J103. And that's what's on page 2. So we'll get there, you guys. Then you're also going to see that there's a tax adjustment. Again, traditionally in a cash transaction, we are going to pay taxes for the year because we're not worried about setting up an escrow account for taxes and insurance. No such thing as an escrow account if it's cash, right? Even with hard money, that would be very, very rare. So in this particular case, you're going to, see that actually on the right, on the seller side, I'm going to jump around for a second, about halfway down the page in section 507, you can see that we've collected $1,875.80 from the seller for the balance of the 2020 real estate taxes. And as you may know, in the city of Warwick, 2020 real estate taxes would run calendar year. So that's why back up to section J106, the buyer now owes the seller a rebate for the portion of the taxes for the remainder of the year, December 4th through the 31st. Pretty simple. Again, prorations would be handled the same, but different on a closing disclosure transaction. So you can see in section 120, all we've done is add the numbers from above because we like to keep those all adding up. And then you can see in section 200 on the buyer side, these are your reductions. So these are any credits that the buyer may have. And really all we have here is the deposit because the buyer has applied $5,000 towards their $249,900 sales price. And the lowermost section is just simply the math, guys. Okay. On the right, you're going to see it's exactly the same way. The seller side is the sales price plus their incoming items. So the gross amount that's due to the seller appears in 420. And then we're going to reduce it by all of their transactional costs, fees, expenses. If this was a closing disclosure, we'd call them their debits. It would be their closing costs that are on page 2, the mortgage that we're paying off, the balance of the taxes. I know I skipped one, I did that intentionally. And then the final water and sewer. So this is where you're going to see those items, and the net is what the seller is going to walk away with, $197, $460, $92. Now I skipped the deposit. Why, you may ask? Because commissions on HUD statements are treated very differently than they are customarily on the closing disclosure, as we had talked about. So sticking with the seller side for 1 second, Jen, if we go to the second page, at the very top to the left, where you see, a little more, section 700 right there. So see where it says total real estate brokerage fees in that gray box? Yep, $12,495. Now to the left, you're going to see the breakdown of the way that we are collecting and dispersing the respective commissions. And then in section 704, which also remains in the column, you're going to see $5,000. Do you see that? And then over to the right, you're going to see $7,495. Jen, you're still screen sharing, but we lost the Alta or the HUD. I forget which form we're on now.
It's HUD, isn't it?
Yep, HUD. It's like
Sorry
kind of
about
in the
that.
middle
1
of the
second.
browser.
I was trying to help Carol out with
Oh, no problem. So the 7495 that you see there to the right is the commission paid at settlement on line 703. Bear in mind that if you take the 7495 and you add the $5,000 deposit that was on page 1, it brings you to the gray box, $12,495. So you guys, this is where you can see how commissions can be reflected in 2 components or 2 pieces, one for the deposit, one for the balance. It would be treated the same way on the closing disclosure if the deposit on the seller's CD was showing the deposit. The problem is most of the time the seller's CD isn't showing the deposit, it's just grossing it up. So on a CD, it would have shown something like $12,495. Okay, so I just wanted to break that down because again, this is one really odd nuance. Jen, if you scroll down a little bit on page 2 here, you're going to see in this grid how the numbers just follow suit with the respective seller's account fees, which was the attorney costs, disbursement fees, tax stamps, and then the balance of the sewer payoff. So this is a place where this particular transaction, there must have been a sewer assessment and the seller agreed to pay it, so we collected for it. On the left, because remember, these documents are broken up into sides. The right is the seller side, the left is the buyer side. You can see the closing costs that the buyer's responsible to cover starting in the 1100s, which covers their title insurance, attorney's fees, recording fees, the like. And those are all sum totaled onto 1400 at the bottom. If you were to note 1892 and 13/5/12/74, we go back to page 1, you're going to see that those items, as I promised, because this is just a detailed counting, are carried forward. So on the left, in section J103, under the settlement charges for the buyer, you see that 1892. And to the right, in section 502, you're going to see the same 13/5/12/74. So again, page 1 is a summary page. Page 2 is intended to show you more of the details. And then of course, page 3 is just your signature page. So I don't know if this is useful. I don't know how many of you are having the luxury of seeing cash transactions or hard money transactions these days. But this is basically kind of the final piece of the transaction that we look at. So I don't know if there's any questions about the HUD statement. I know Carol did have a question about taxes, and I know Jen shared that with her. Are there any questions for me about any of the forms that we've reviewed or anything else that you can think of in the next 9 or 10 minutes that we have here to address?
Melissa, I will say that this is a ton of great information that I'm really hoping our agents took note of and really absorbed, because a lot of times, when our clients or customers are asking us questions about this, it's really hard for us to articulate. So I think by you reviewing each line with us and really explaining it in detail has been a wonderful help. So thank you for that. And I would love for this to be an open forum for the next 5+ minutes for all of us that are on to really ask any. No question is a bad question, by the way. We really want to make sure that you're able to understand these forms, so that way when you do get a question on it, you don't have to just surface over it. You can explain it, and then also have help from Melissa or whoever your counsel is.
And Jen, even if it's just to share experiences of what's working, what's not relative to COVID or before, as to, when you guys are seeing these documents and, how you can go about sharing that data. My intention wasn't to go through the line items in such painstaking detail. I was really intending to talk more about the kind of fundamentals and then get into the guts of it. But I think we achieved the fundamentals while looking at the line items, which maybe was even better. Which really was just a function of technological fail-safe, I guess.
I think it worked out well. I think you really explained it great. So.
Oh, thanks.
All right, let's hear from we have some people here. So unmute yourself. Let's get some engagement. We have a few minutes left.
Mary, we definitely can share the forms as well as the PowerPoint with you. So if that's something that you're interested in, I'm sure Nicole will be happy to release that information. I'll make sure she has it.
Hey Chase, how's it going? You have a question for us?
Hey, good. No, I just want to say thank you very much for the presentation. Like as a person that hasn't done many transactions, I'm still a little cloudy on like how everything works. So there's a lot of mystery for me today, but at least now I've seen them and I've been through them, so I can recognize them when they come up. So I'm thankful for that. But and for you for making the presentation. But I don't have any specific questions. I just want to say thanks and that I was listening, and I'll be reviewing the documents and the recordings, 4 of them, I guess.
Yeah, all 4 of them, I know.
If you do have any other questions, don't forget you have your office, your mentor, your productivity coaches, and your leadership to help you with this as well, that have gone through these many, many times. So we're all here to help all of us together. So thank you, Chase, for that. Any other comments, questions, additions?
Jen, hi.
Kaylin?
Yes, I want to say this was excellent information, especially that, buyers and sellers are getting the CD before the closing. So we really need to be able to explain some of these issues and line items to them before they get there.
Yeah, I think routinely, Lynn, we have clients that are just completely uncertain and really anxious about it because they don't know the way the numbers are going to work. So I think it is really important for you as an agent to have a familiarity with it. And if you're not sure about something, ask. Ask the closing attorney, ask the seller's attorney. There's, like Jen said, there's no such thing as a stupid question. I actually had an agent yesterday email me and say, I'm confused about the proration for the condo fee. And I said, well, it's because it's half the month. And she said, yeah, but the math doesn't work. And I went back and looked, and sure and more, she was right. Both the other attorney and when I scrubbed it, made a mistake. It was off by like $60, but it was off. And, you know, they changed it this morning because the closing's on Friday, and it was brilliant because we had the information exchange in advance. The struggle is when we don't have the time to look at the information, that's where mistakes are made, and that's how things get missed. And unfortunately, we don't have that extra safeguard.
Right. And let's face it, the sellers typically look at the bottom line. They
That's true.
And that's it. And then they
Very
go
true.
backwards. So
Yeah.
thank you so much.
I can't tell
I
you
do have
how
a question
often
in,
there's a mistake. And I find it as seller's counsel, which is why I think in part sellers attorneys have had such a big role.
Oh, and I wanted to mention one more thing with, you know, sellers and buyers closing separately.
Mm.
Sometimes I just had one recently where the CD was off because the lender, even though the seller agreed to say a $5,000 credit, the lender wouldn't allow $5,000.
Yeah, that's routine, actually. It does happen with regularity where numbers are shifting around. I think most attorneys' best practice is to have a power of attorney over their seller clients because it is customary for there to be kind of, you know, a fluid motion and some moving pieces right up to the end. But yeah, there's some windfalls where the sellers actually get more because the bank won't allow the full use of the closing cost credit.
Sure.
Jen, you said there's a question in the chat?
yes, there is. Which is better for overage checks, at the attorney's office at closing or from the brokerage?
So the brokerage has to write the excess escrow check or the overage check no matter what. The question is just whether or not it's going to be paid to the seller. And if it is, then there will be a line item reflected for the overage amount on the closing disclosure, or if it's going to be paid to the closing attorney. And if it's paid to the closing attorney, then there is no line item referenced because it's already factored into the bottom line. So as far as I'm concerned, there's really no right way or wrong way. It's just a matter of personal preference and the way that the closing attorney is prepared to handle it. So as the listing agent, it's just really important that you, first of all, remember that you have an overage check. 'Cause I know, again, it's easy to kind of forget about it. And then secondarily, make sure that you're communicating with the respective closing attorney, because even as seller's counsel, I'll get that question a lot and they say, how do you want me to handle it? And I say, that's closing attorney's decision. I'll find out. And then the closing the attorney will tell us what they want to have done, maybe based on how they've already drawn the numbers. So no right way.
All right, anything else before we end today?
Perfect.
Great job. Thank you.
Thank you
Melissa,
very much.
great job. Thank you so much.
Thank you. Thank you, Jen, for all your help and allowing for the segue. Thank you all for your patience in modifying. I mean, this is like the Zoom call that just keeps on giving. So appreciate it.
Very much.
We're experts on it. All right. Thank you, Melissa. Have a great day,
Thank you.
everybody.
Bye.
You too. Bye-bye.
Have a good day.